I want to thank you so much for joining us and welcome you into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Chaz Price. Scott Kirshner is off this week. My name is Chris Swan. Like I said, really do appreciate you joining us. 419-794-3030. That's how you reach out and get in touch with the team at America's Retirement Headquarters. 419-794-3030. Also online, arhq.com. Today on the show, is it better to take a monthly pension or a lump sum? If you're worried about outliving your income, the guys, we've got some tips for you and how to pay less taxes in retirement. We've got your next move on that. But first, let me check in with the guys themselves. Chaz, Nolan, glad to be with you. How are you?
It's doing great. Yeah, beautiful weather here in Northwest Ohio. So it's that time of year. Got the boat out, and hopefully everybody has a wonderful Memorial Day weekend. Have a great time cooking out with friends and family and enjoy it. It's all about, enjoying your family and remembering the holidays and those of us that maybe can't be with us. So doing great.
Absolutely. Getting ready for the bachelor party just 1 week before the wedding. So just kind of putting some of the finishing touches on all the details, and spent this last week making 250 small plastic boxes.
Oh, my.
For the guest gifts. We're going to put s'mores in there. So it was really a cool, cute idea my fiance came up with, but if you need some just something to do, some mundane activity for an afternoon, do 250 plastic boxes.
You know, we've had drawn a lot of parallels between your wedding planning and people getting ready to retire. As you enter into the final week here, you want to make sure that all your T's are crossed, all your I's are dotted before you enter into it. And the same sort of thing when it comes to retirement. You want to make sure that everything is squared away, but also know that there may be hiccups along the way. And I'm not saying that anything bad is going to happen. I'm not wanting anything bad to happen, but there's occasionally a hiccup. A groomsman is going to be maybe a little hungover, or someone showed up late, but you just got to roll with the punches and be able to adapt. And that is the parallel with the retirement plans. It's not always going to be green, blue skies and perfect weather out there. There's going to be a couple hiccups, but if you have a proper plan in place, you can roll with those punches and adapt. That's what we want to get you to think about this week. And so, again, when you're ready to start that planning process, the number is 419-794-3030. Let's start off here with a flashback to 2019, where there was a lot of discussion around a statement that billionaire Ray Dalio made about cash being trash. Well, recently Ray flip-flopped on that, telling CNBC that cash is actually a better investment than stocks and bonds.
You've got a cash rate that's relatively high. Cash used to be trashy.
Cash is trash, is what you used to say.
Yes, negative 1.5%, 2% real rates. Terrible. Now cash is relatively attractive.
So what do you guys think? Do you agree? And isn't this a great example of why we need a financial advisor? Because, the economy is constantly changing, all those hiccups I was talking about earlier, and our investment should change as well, right?
I agree. They really should change with what the overall markets do. And if we think about needing a financial advisor, I think it's like having a good coach and being kind of adaptive to what the market conditions are. Markets do change in a hurry. I think having a good coach, helps you formulate a good game plan and can help you avoid making some short-term poor decisions. I recently got a phone call from a client we'll call Dan, and Dan was worried about what's going on here with the debt debate and was thinking, maybe I should just go ahead and move my money to cash until all of this stuff settles down, because, if we default on our debt, how dangerous would that be to my financial savings in the stock market and the economy, and what could that mean? And, I had to remind him that, it's been over 70 times now that the U.S. has raised their debt debate. In fact, this is just another time where they're going to, poke fun at each other from a political standpoint. But at the end of the day, we'll raise our debt ceiling limit, and then, we'll get through this. So short-term changes based upon emotions can create long-term pain. And, by being a coach, what I was able to do is I was able to talk to him and say, what, we can take you and we can dial it down. So as we talk about with our strategies, kind of letting off the gas pedal a little bit, not just coming to a screeching halt and going to cash, but instead being more adaptive to what the market conditions are. If you're going to be concerned about this, I would say these are the type of reasons why you want to make sure that you're working with a financial advisor. When you think about the markets and how to keep up with the changing that are occurring in the market, Chaz, what would you say?
Well, I would just first mention that we draw correlations to Warren Buffett, one of the most successful investors in the world, and recently he shared his perspectives on holding cash. And definitely Warren generally encourages investors to be pretty cautious about holding too much excessive cash for that very reason that you say, Nolan, is because it's a great short-term vehicle, but it's certainly not one that you want to take the long-term retirement trip with. And so there's a ton of opportunity cost in holding too much cash. Even at these rates, I think if we look at currently right now, the S&P 500 is up approximately around 9% year to date, something like that. What's interesting, though, about that is when you look at the sectors of the economy, there's 11 of them. Only I'm looking at about 4 or 5 of them are positive for the year. And so there's a lot of opportunity when it comes to opportunity cost with owning too much cash. One sector of the economy, information tech's up about 26%. So yeah, is it an attractive interest rate right now in the short term? 4 or 5% does look good, but are there definitely opportunities elsewhere in the market? And I would say absolutely. So I think that's one area where clients generally overlook when they head to cash. It's because there's volatility and there's fluctuation in the market. But you have to remember that fluctuation and volatility is sometimes good as well. It goes both ways. So if we're sitting in cash and we miss out on a correction like we've seen or a recovery like we've seen this year, then you're kicking yourself on the other end of the spectrum. So I think just again, working with a financial advisor, taking out some of the emotional distractions that sometimes deter our investors away from hitting those long-term averages, and helping stay diversified, owning some cash for emergencies, not too much, but then rebalancing in times during market volatility to capture some of these investment opportunities that we've seen are really starting to work pretty well this year.
Yeah, so some specific tips that we can take for you, our listeners, if you're wondering how to keep up with the changing markets, maybe you feel like it's time to get that second opinion, time to figure out what do you guys think? Maybe you need a coach. The things that we can do for you is, number one, we can use our software to create clear financial goals for you, help you define those SMART goals, knowing the best way to help you achieve them is number one. Number two, we can also stress test your risk tolerance so you can understand if and when the market goes down, what could be the probable outcomes of the downturn in the portfolio. Maybe there are steps that you should take to lower your risk once you know what your risk number is. Number three, we can talk about diversification, but more importantly, talk about how to take a sniper shot approach. So if we head into a debt ceiling issue, or if we go into a recession or stagflation, what investments may be the ones to put into your portfolio that could survive and thrive in that type of an environment. We'll help you be your coach. And number four, take that long-term perspective. We'll provide our combined years and years of investment experience and keep you educated. That could be an education by coming out to one of our university classes. It could be coming to our semi-annual economic update, or our proactive approach of getting together face-to-face and talking about your portfolio. Keep it consistent. Consistency is like Warren Buffett talked about. It's really kind of crucial to stay consistent, regularly continue to contribute to that investment portfolio if you're still saving and investing. When times and the markets are down is when you increase contributions. Number 7, be patient and disciplined. I know on TV, on the 48 Hours and Dateline, they can solve a murder in an hour, but this is years and years of work, and we want years and years and years of a great retirement. So sticking to that disciplined investment strategy and being patient can pay off. Monitor and review. Have those pre-designated points, as you talked about, when to rebalance, if and when the market goes down 10% or every 6 months, and then seek that professional advice. So, for those of you that are looking to maybe get a second opinion, we can go through all of those steps for you and create a team action plan that will help you be a better educated investor to keep up with the changes in the market.
And all it takes to get started is picking up the phone and giving a call, setting up a time to speak with the team. 419-794-3030. As Nolan said there, you spent years and years accumulating this nest egg, getting ready for retirement. You don't want one decision based solely on emotion to jeopardize that and really undo what you spent all these years doing. But having a properly disciplined plan that knows there are going to be changes down the line that need to happen, but knowing when and how to do it isn't as easy as it may seem. And again, you don't want to let emotions dictate everything. So pick up the phone and start putting together that plan, or have that plan reviewed by the team at America's Retirement Headquarters. Really easy to do. 419-794-3030, or you can always go to the website as well, arhq.com.